Yes, there we go.
I think we're live, yeah.
Okay. Hi everyone, welcome to this live coverage. We are starting a bit over the hour, but here we are with Yohay. Hi Yohay, how are you?
I'm good, Val. How are you?
Hi, really great. We are here to comment a bit about what's going on with the Bank of England. What happened, Yohay? They left everything unchanged, right? They left their economic policy unchanged?
Exactly, they left the interest rate unchanged. Actually, it's been at this level of 0.5% since March 2009, so it's already over 7 years. And it was a unanimous decision. Once again, 9 members voted for leaving the rates unchanged. There were rumors just before the release that 2 members are strongly considering voting for a rate cut, but this never happened.
Okay, no changes in the votes, and not much changes in the pound, right?
The pound is bouncing a bit up, but within range as far as I see it. 141.57 at the moment, but not a big move in comparison to what we know that the pound can do. It can do a lot. So
Okay, yeah, I'm taking a look at it. Okay, I guess we don't have much to work with the Bank of England as usual. They will release the minutes, or they have already, right? So maybe we can get some headlines from there, but I don't believe the Bank of England will be thinking about rate hikes or using the APP program anytime soon, right? I do believe that market speculation is delaying the possibility of a rate hike in the UK towards 2017, right?
yeah, I mean, expectations are for sometime in 2017, not really early in the year, not anytime soon. Of course, according to a recent poll of economists, the Bank of England could consider even cutting rates if Britain were to leave the European Union. This highly anticipated, perhaps overhyped Brexit referendum on June 23rd.
23rd? Okay, I was thinking about the 26th, not sure why. Anyway, I don't know. the Brexit thing will probably keep the pound subdued until that moment. So not much to work with it, right? Okay, I'm sorry, guys.
Yeah.
I see you have some lines there, 41.25 as an immediate support. I was thinking that if a pair takes out today's low, we can go to retest that 40-50 region, right? Where we have some buying interest, but I still believe that the 140 level is a tough one to break, and that we will meet some buying interest around it if we fail to that one. The only chance is that we have a really surprising U.S. inflation figure later today, right? But it seems that that's not going to happen anyway.
Yeah. Yesterday we had sort of not really good retail sales report from the United States, but the dollar that was already rising continued rising, especially against the euro, the yen.
Yeah, safe haven funding currencies are not the ones favored these days. Anyway, remember we talked plenty of times about this 1460 level, this region that has capped the pair, the euro, I mean, or ever since, I don't know, January 2015, yeah, for over a year. So the pair tested to the pip, right? By the pip, sorry, last week. This week, sorry, and after repeated failure, it's begun to correct lower. I'm still not sure if the euro can go much more lower. I mean, it's correcting and it will continue, but I'm not seeing a bearish trend still in here, right? It's not maybe a break in the line which stands around 940 in the coming days. In between 940 and 110. That will be the level to watch if the pair continues retreating towards that line. But so far, I believe that the correction can go down to 1160, and yet won't harm the bulls that much. No?
Yeah, I have your euro dollar, well, 112.15 and then 112.50, yeah, around where you're talking about, because that was the sort of the low level seen towards the end of March. Yeah, we don't have too many euro-specific events. I mean, today we had inflation figures coming out of the eurozone. They were marginally better than expected, but there was no real influence. Yesterday we had marginally worse than expected figures, the industrial output figures. I think it's mostly now about the US dollar. The mood has improved towards the US dollar. It was very negative against the US dollar.
Yeah.
Let's see if this continues.
I don't know. So far, I believe that this is just corrective and that we are still far from dollars talk about dollar strength, you know. But well,
Yeah.
dollar Japanese yen keeps consolidating in near the lows. If you take a look at bigger time frames, fact is that nothing has changed in the year. We may be drawing a bottom, but it's far from being confirmed. I do believe that those lows around 110.60 are the line in the sand at this point for the dollar Japanese yen, as we need to recover at least above that level to start talking about a bullish continuation, and probably bottom has haven't been set. But at this point, seems that bear maintain the lead in here. I'm still looking for a decline down to this region, 105.70, 106.20. Those are the probable bearish targets I got for the dollar Japanese yen. Of course, if we take the lows of this week. The policymakers in Japan had said that had not really said, but they have been jumbling a lot about the possibility of intervening and not being comfortable on one-sided moves. But the fact is that they won't really worry unless the pair breaks below 105, right?
Yeah, each time they have a new line in the sand, or analysts talk about a new line in the sand, and I guess they're now a bit happy that currency pair is a bit higher, moved above this 109 that capped it last week, and now moved above this line and settling above it, but it's still, of course, they would like to see much weaker levels for the yen. Earlier today, or during the night here in Europe, I mean, in Asia, the Singaporean authority, the monetary authority of Singapore, announced monetary easing. The Singapore dollar slipped, and this raised expectations for other central banks in Asia, of course, China and Japan and others, to also introduce more easing. I'm not sure the Bank of Japan, well, it's easier for the Bank of Japan to act when the yen is weak, going with the trend, than trying to catch a falling knife.
Yeah, exactly. I was thinking about that. I remember that when they started with intervention, the first move, I commented this week, but the first move was a 300 pip reaction to the upside that was delivered in the next 4 or 5 days, right? Then when the pair was bearish back in 2011 or there, then they made another intervention and the rally was of 140,
Yeah.
right? And it takes just 1 day to erase it and print fresh lows for the pair, right? And the third intervention, well, I do believe it hardly reached 100 pips as the immediate reaction, and then the pair plummeted again. So you have a nice point saying that they have to intervene when the pair is bullish and not when the pair is bearish, because anything that they can do when the pair is bearish will probably be reverted by the market in the next few days.
Yeah, agree. The market showed the Bank of Japan that the market is stronger.
Yeah. No reaction for pound after a few minutes, so that will probably mean we have not much close. And the Aussie is back.
Sorry.
Yeah. No, tell me.
I just see the headlines regarding the meeting minutes from the Bank of England. They talk about Brexit would result in extended period of uncertainty. So they do have an opinion about a Brexit. They don't want it.
Yeah, they didn't want it, but that's something we already know, right?
Yeah, not a
Yeah.
big secret.
I was watching the Aussie is back around 77 on relatively good employment figures in Australia, right? Last night, but still, we have that level, that highs around 77.20 that need to be broken to confirm further gains. I know the Bank of Australia is not the central bank. Australia is not comfortable with the pair at this with the price this high, but I do believe that there's a good chance that we can go up to 80 before they have to really act. Particularly if we close the week somewhere above the 77.20 level that has been happening the upside so far this year.
Yeah, that's where the pair stopped. I think we're seeing commodity currencies rise in general now, and the Aussie perhaps is the one best prepared to take advantage of this thanks to the better than expected jobs report. But well, also oil prices are rising, so it's good for the Canadian dollar.
Yeah. I didn't expect the growth recovery. They will have their meeting this weekend, right? This weekend we will have they'll have meeting of oil producers of all the world, right?
Yeah, it's on Sunday. It's in Doha, the capital of Qatar. It's a big meeting. Also, the Norwegians were invited. I'm not sure they'll attend. Saudi Arabia and Russia, in theory, agreed on something, on some freeze, and Iran doesn't really want to play along. Iran wants to pump out as much oil as possible now that the
Yeah,
sanctions have been lifted.
yeah. They want to recover the pre-sanction levels, right?
Yeah. I doubt that they can reach any significant agreement, and even if they reach a significant agreement, I'm not sure they will implement it. So
Yeah. So that should be negative for the oil into the week opening.
yeah, I think so, but
Still seem
expectations
to
are
have,
still high.
yeah, still I believe that we have sort of a floor now around 35, and I don't expect really to see again something like the 23, 25 we saw earlier this year. Okay, disappointing Bank of England. What do we have? Oh, okay. On Friday, we will have plenty of data coming from China at the beginning of the session, right? We will have GDP in the first quarter in China, 6.8
Yeah,
one, 6.8 the previous one. I don't know, something above 7 will be extremely positive for the market and boost risk appetite. This positive sentiment you were commenting a few minutes ago. Uh, but it needs to recover 70%, right?
Chinese GDP.
Yeah, I don't see the expectations, but previous has been 6.8. I believe that the previous to that was 6.9.
Yeah, the government set a target of between 6.5 and 7%.
Yeah,
And I believe the GDP result will be somewhere there because that's what the government wants and that's what the government gets.
yeah,
So
because they are great forecasters, right?
yeah, yeah. Anyway, even though nobody believes the figures, they still move markets, I
Still
think.
with
So
markets, indeed. I do agree with that. But it will be the key for the sentiment, right? The key for market sentiment during this Friday. Because whatever, if it's positive above that 6.8, will probably boost risk appetite. But if it's anywhere below that 6.8, we will probably see the Japanese yen and the euro and gold regaining ground strongly.
Yeah. So I believe we'll have positive figures for GDP, for retail sales, for industrial output.
Yeah, there's plenty of that.
Make everybody happy.
Yeah. Okay. I don't believe that we have much to say. It's really sad, but the Bank of England is not offering us much to cover live. You know,
No.
guys, I always think that one day they will catch us with the war down. We'll do a huge announcement. We won't be paying attention to the Bank of England because we are bored of getting no evidence. And when that time comes, then is when they will drop the bomb, right?
Exactly.
So anyway, here we are. Here we go. Okay. You believe, Yohay, we can wrap up this?
Yeah, I think we can.
Okay. And you said something about what
About this, well, no surprises from the Bank of England. There were rumors that two members would vote for a rate cut this time or seriously considering it. We haven't seen that. What we are seeing, and it's no surprise that the Bank of England is upping the ante on sort of the anti-Brexit talk, not saying it very directly, but talking about it more and more. The Brexit would result in an extended period of uncertainty. In other words, please vote to stay in. No surprises, pound dollar jumps a bit up, jumps a bit down. I think if we look at the chart, we are about 10 pips above the pre-release levels. So basically,
Yeah.
the meeting minutes did not move markets too much.
Yeah. Well, the only thing I would like to add to that is that regardless whatever happens with the greenback, right? If we have a stronger dollar, a weaker dollar, the risk in the pound dollar, sorry, will remain towards the downside at least until we have the referendum by the end of June. Market is not willing to risk buying the pound because it's too risky at the time being. If you ask my personal opinion, I don't believe we're going to have a Brexit, right? Like we didn't have a Brexit in the worst moment of chaos of the euro area. So this one seems also unlikely. But anyway, the investors and speculative interests will remain sidelined ahead of the news with the downside favored because no one wants to buy the pound. Another thing that I wanted to add is that the pressure is towards downside doesn't mean we will have intraday movement, high movers, right? But still, I believe that spikes are selling opportunities. As you can see in the chart, the pair has been quite unable to hold gains above the 143 level. Okay, and every time we get above it, we resume the decline, and with lower highs print more weekly basis. So for the most, I will stay away from any bull pound position. Okay. Okay, everyone. Thanks for being with us this little time. Remember what I said one day the Bank of England will surprise us, and we will be here. Okay, we will be here to share with you. Thank you, Yohay, for being with me today.
Thank you,
It's so
Valeria.
pleasure to have you to share this time with you, this event. And see you soon, okay?
Okay.
Okay,
See you.
bye-bye.
Bye-bye.